This part here is on registration. So in this segment, I will talk about registration. Now, what you need to know is that for all taxes, not only VAT, but for all taxes, for you to be able to charge VAT, you must be registered. It must show on your URA account, on your TIN. If you're to, pay rental, you must be registered for it. Income tax, you must be registered for income tax. Payee, you must be registered. So registration is part of the tax system or the working of the tax system. You must be registered. So everything starts at the registration. Now, when you register for VAT, you now qualify to be a taxable person. You become a taxable person. Okay, you become a taxable person. There are also those people that, yes, they are not registered, but they are taxable persons. So it means that the VAT law has defined a taxable person. Section 6, for that matter, defines a taxable person as a person who has registered their business or registered themselves for VAT as per the provision of Section 7. Section 7 talks about registration. Or a person who is not registered but is required, has been defined, he meets the criteria, and is required to register for VAT. This person will be taxable, a taxable person from the beginning of the tax period immediately following the period in which the duty to apply for registration or pay tax arose. So that is where everything starts. Taxable person must be registered for VAT. So you look at this example, you read through. So who are these persons required or permitted to register? We are saying that in order for one to charge VAT or claim any input tax, as we shall consider later, there are processes that may have to be completed, may have to go through. The very first process is being registered for VAT. Section 8 of the VAT law provides for registration of the taxpayer for VAT purposes after fulfilling those requirements for registration. In order for someone or business to register for VAT, they must be, first of all, dealing in taxable supplies. There's no use for you to register for VAT if you're not dealing in taxable supplies. So it means that you are already in business or intending to get into business of taxable supplies, and then your supplies exceed a certain threshold, which is, I think we missed a one here, which is 150 million for the year, or 37.5 million for 3 months. 37.5. 37.5. So you correct those. There are some figures here which were wrongly. You correct them. I know you know those figures. It's 150 for the year. Then within 20 days after the end of 3 months, your taxable supplies were equivalent to 37.5 or in excess of that. In those circumstances, you must register for VAT. So the programs for VAT registration are basically, I should say, how many? Let me count. Compulsory, that's number 1. Voluntary, number 2. And forced, number 3. Those are the 3 programs under which you can register. Compulsory is this one that we have been talking about, which is, very clear. You're dealing in taxable supplies. Your supplies in the year exceed 150 million. If you don't achieve that in the year, check your performance in 3 consecutive months. Actually, you begin by checking your 3 months. Check if you have 37.5. If you don't achieve 37.5, then you still have an opportunity to check for 12 months. That is 1 year. If you have made 150 million. Then again, under compulsory, we have the local governments, commissions, agencies of government. These ones shall apply for registration at the date of commencement of those business activities. Of course, we know that there are some government agencies that don't involve themselves in business activities. But if you're intending, like, let me just give one example, NARO, National Agricultural Research Organization. This one has business activities. They develop varieties of different plants and, at the end of the day, they sell them. They have fertilizers, which are improved fertilizers. They sell them. So they are involved in business activities. So these are required to apply for registration at the date of commencement of those activities. So if you become the head of any of those commissions, I know some of you are connected, you might be appointed by the president as the head of a new commission. So registration of taxes, VAT, to be more specific, is part of the things you must do as you are setting up that commission. This implies that once an entity deals in taxable supplies, they do not have to wait for the end of the 20 days after the 3 months to apply for registration. They have to apply as and when they commence business. If the entity fulfills all the above, then the entity is supposed to register for VAT under compulsory registration. Then we have these that really may not meet those set conditions of registration and under compulsory, but they are interested. They are interested. So one can register under voluntary registration program, but you need to make a written application to the commissioner who must give you the approval in writing. But before applying in these circumstances, there are just a few things that you must have in place. 1, you must have a physical address. They should be able to visit physically your offices to see where your business is operating. You must have proper accounting records, at least for the few transactions you've had. You must be having invoices, you have receipts, you have cash books in place, and you have the intention of continuing to keep proper books of accounts. You must have a bank account. That can be proved with a bank statement. And then you must be fit, proper, not below 18 years. You can read, understand, and not only reading, you may not be able to read or write, but you can understand. Someone tells you something, you can clearly understand. So those people we call fit and proper. You should not have previously registered your business for VAT and then you were deregistered. you fail to perform the duties under the VAT law. In those circumstances, it's going to be very difficult for you because you, you need to first of all defend why did you fail the other time, and then which assurance does URA have that you this time round perform. So once one has voluntarily registered for VAT, he or she cannot apply, for the registration, not until after a period of 2 years, once this approval has come through. Then number 3, we have first registration. First registration. Section 8, subsection 6 of the VAT Act empowers the Commissioner General to register a person if there are reasonable grounds for believing that the person is required to apply for registration under Section 7, but has failed to do so. And that registration shall take effect from the date that has been specified in the certificate of registration. So what happens here is that as you're filing, of course, your income tax, they look at your income tax return and see that you have some transactions that are taxable. They look at your registration details, VAT is not there. So you'll be forced, and actually they can even ask you to file your first return. The Commissioner General has been given these powers to forcefully register all those taxpayers who the Commissioner believes they are supposed to have registered, but they have failed to do so. So that is Section 8, subsection 6, that is empowering the Commissioner General. Now, each time you register, not only for VAT, but for all the other taxes, your certificate of registration from URA will show the effective date of registration and when your very first return is expected to be filed. So upon application, the effective date will be communicated. You'll be examined on when you think someone is supposed to file their first return. We are going to be looking at all those circumstances. So we are saying that the application of VAT registration form should be filled and taken to the nearest. Okay, this is the, the traditional way, and this is what is gazetted in the law, that you fill, take URA and all that. But now everything has been simplified with the e-system, the e-tax system. So, our examiner is flexible enough, versatile, knows that things are now digital, so they may not really examine that part of taking the things to URA and all that. But ideally, if you find that, like today is 10th of August, if you find that, let me see, we have we have June, July, August. So if you see that your sales across June, July, August have hit taxable supplies, hit and exceeded 37.5, then you'll be required to register by the 20th of September. 20th of September, 20th day of the following month. You must register. Yeah. You must register by the 20th of September because you have met the registration criteria given in the VAT law. Right now, you will simply amend your registration details. Previously, the old way was to register for VAT as a separate registration. And actually, you'd get a separate certificate for VAT. That has all changed. Today, the the one certificate, the one tin will indicate VAT as your, you know, tax status. You are now registered a taxable person. So since you already have a tax identification number, I suppose, you simply amend your registration details. If you have not yet registered for taxes entirely, maybe this is your first month, I don't know, but why would you do that? But let's assume you've not registered for taxes. Now you have hit the 37.5 and beyond. 20th, you register. As you're registering your business, for taxes include VAT. You have to complete that schedule for VAT registration. So why would businesses, you find that some businesses are fighting so hard to get registered. I think the one big reason is the competitive advantage of your business positioning itself in getting good deals from well-established corporate companies and also government. That is the number one reason for most businesses, that today you cannot submit a bid and you get it if you're not registered for VAT. Most corporate organizations will want you to present your VAT registration. That's number one. Number two, that I think why companies go into a rush for VAT registration, and also you find they are too stressed. If they fail to get the registration, they are rejected. They get so stressed because you cannot recover input. You see, as you are doing business, you're dealing with people that are registered. You get an e-freeze invoice from your supplier, which has VAT. So for you to offset, because now that VAT is going to be an expenditure on your part, but you can reduce on the cost by getting registered. You also charge VAT and offset that against. You may also be dealing in zero-rated supplies like pharmacies. Pharmacies that they deal in medicines and drugs, which are listed. We shall be seeing that listed under the zero rate. You don't have, your output is zero, but still you have that opportunity of having a claim, because if your output is zero and maybe you have 200 million in input, it means you can claim the 200 million from you can get a refund because you didn't have where to offset. Now you have a credit on your account. So that is mostly see people, fighting so hard to get registered. The system also encourages exports. Okay, these are now others. System encourages exports because VAT is refunded on exportable goods. So if I'm into export, I'll fight so hard to register my business for VAT because I'll know that the VAT I'm going to incur on the exports is going to be refunded. The system puts the firm in a better position in the market. This I've talked about. People will only deal with you if you're registered. Some people, not all of them, but some people will only deal. But mostly those who have good business. Those who are willing to give you good business, where you can make good money, require you to be registered. They want you to be clean. This system helps the firm to improve efficiency. Okay. The system has a wide base. Okay. That's now on the part of Uganda. VAT registration puts the firm in a more strategic position of winning tenders. Okay. Repeating that again. But it has its own disadvantages. The administration is very complicated. You must be up to speed when it comes to bookkeeping. Proper books of accounts must be there, financial records. And better still, you must employ an auditor to check your books, see that you're not getting out of compliance. The cost of collecting this tax may be very high and complex, especially on the part of government. So we find that all the money that we are collecting is actually going into collection and administration, which is not economical. The system requires a lot of cooperation from the taxpayer, which is very difficult in most cases. Naturally, especially developing countries, businesses are not transparent. I don't know why. You get a landlord who does not even want to, especially these landlords, they really don't want to cooperate. I have had to, uh, you know, change locations and all that because you have a landlord who doesn't want to declare the actual rent you are paying. That kind of thing. You're paying, you are paying 5 million, but the guy is saying, let us show you are a 3 million. And then it becomes a cost on me. Mm? It becomes a cost on me. You don't want me to speak the right. So if you are, because life, at times you may not have to have that slip because assuming URA comes and they check, I'm paying 5 million. Now, because I want to be a good tenant, I have to cooperate with you doing data business. So a lot of cooperation is needed, which we don't have these days. People are not transparent. People are not, they don't want to come out. So it is still a problem. That's why you see VAT, we are not collecting the right amount of VAT because people don't want to. Others, they want to forge transactions, they want to show wrong things. It's so difficult. So difficult. So there is that problem there. As a VAT registered taxpayer or business, there you have obligations, and these are also indicated in the taxpayers charter. If you have been able to go through the charter, keeping proper records, submitting monthly returns, whether you have made money or not, whether you have a transaction or not, nil return is expected at least. You must charge VAT on all transactions, meaning that you have to go through that process. You must have someone. You must have a desk at your organization for you to manage these taxes. You must designate someone. Okay, they may not be dealing in only tax transactions, but also others. You instruct this person to review, for example, payments, if you have prepared checks, hmm? or invoices. This person must go through and, advise. Actually, right now we must have tax advisors in all our organizations. You must have a desk you must have an office for your tax advisor. If you want peace, you must create tax advisor and say, yet Ronald is our tax advisor. Agaba Nicholas is our tax advisor. This guy wakes up every day to think tax for the organization, to manage tax, to review tax transactions. That's their job. If you don't do that, then you're going to have complications because it is your obligation. It is your obligation to ensure that you comply. Displaying registration, not really. That's not okay. You can display if you want, but of course, this will work for small businesses which need to pin all over. But anyway, that is another obligation. But as long as you have the registration, there's no problem. Submit a schedule, okay. Still part of the issue of records. Taxpayers who apply, okay, this is still part of the records. Yeah, the registration can happen voluntarily, or you can be registered, knocked off the register for different reasons. Maybe you have failed to make it, 2 years have passed and, things are not working out. You're below that threshold. You ceased making taxable supplies. So there are several, reasons we can give here. You read about all that. This is theory that you can maneuver. The registration can also happen if we have a change in the form of business, like a sole proprietor forms a partnership, partnership is dissolved, and one runs the business as a sole proprietor, and so on. Incorporating a company, you have been doing business as Ronald or Nicholas, and now you want to be Ronald Uganda Limited. So you have to register the other old form and then register afresh this new company. So the issues are there, not very complicated. We know these already. The registration comes with disadvantages. Of course, you lose business, the competitive advantage we are talking about, you lose that. You can no longer claim VAT on your standard rated purchases. Your customers may choose to trade with other VAT registered suppliers, your competitors. You lose that market. If you have stock and assets at hand on which you have received a credit, you'll have to account for this VAT to URA before your registration is cancelled. VAT is calculated at the fair market value of the stocks and assets, and the trader ceases to be a taxable person and cannot charge and claim VAT. Okay. Section 9, subsection 5 of the VAT Act also further empowers the Commissioner General to cancel your registration. Maybe you don't have a fixed place of abode, as you had indicated before. We saw that, but now after some time, maybe you couldn't maintain. You have not kept proper records. You have not submitted returns regularly as required by the law. The commissioner feels you're not a fit and proper person to be registered, to be on the VAT register. So these are some of the discussions that we have under deregistration. Okay, we have VAT paid before registration. Now, VAT paid before registration on stock and capital assets that are still in stock, okay? That are still in stock and acquired not more than 6 months prior to the date of registration can be claimed. So if I have stock, I paid VAT on it, maybe I acquired this stock 5 months ago, I have registered today, I can claim VAT on those articles. There are also issues to do with business being transferred as a going concern. Any person who disposes a registered business as a going concern to another registered person may make the transfer without charging VAT, or in these circumstances, the supply of these goods is exempt. In order for a transaction to qualify for transfer of going concern, the following conditions must be fulfilled. Both businesses must be registered for VAT. The transferor must make a written application to the commissioner stating the details of the transaction, arrangements made to pay outstanding liability, quantities and values of assets and stock, taxable goods, stock of taxable goods on hand at the date of disposal, details of arrangements made for transferring, the responsibility for keeping the records and producing books of the business for the period prior to disposal. Again, the discussion captures change of registration circumstances The application for registration for VAT contains the details which are put in the register of the taxpayer, such as your name, postal address, physical address, nature of the supplies you're going to make, ownership of the business, value. Now, if there are changes in those, okay, especially information that was used by URA to ascertain your business's eligibility for registration, you must notify the Commissioner General within 14 days, okay, that the following circumstances have actually changed. A registered person must notify the Commissioner General when their physical address changes, business premises change or cease to be used, person is authorized to sign changed, the partners of a partnership have changed, there's change in the trade classification of goods, and more than 30% of the share capital of limited company is transferred to another person or group of persons. So in those circumstances, those details have changed and need to communicate within 14 days. And from the date of the registration, one must not change VAT or issue tax invoices for any supplies made, and you must not show your cancellation registration number on invoices you issue. So if you're cancelled, stop showing that cancelled registration number. But of course, as I mentioned, it's still the TIN. So if you're still anyway registered for other taxes, you can still do that. So basically, that is our discussion on VAT registration. I have shared this. The lecture has been recorded, so you can always follow the recording if you missed something.